Welcome to class, students. In today's module, we'll be looking at insurance laws across regions. Insurance laws across regions. So you'll be looking at different insurance laws in different regions like Nigeria, African countries, Europe, Americans, Russia, and the likes. The National Insurance Commission (NICOM), a Nigerian insurance industry regulator established by the National Insurance Commission Act 1997 and empowered by the Insurance Act 2003 and the later law to regulate and supervise the sector, protect policyholders and ensure market integrity. The Insurance Act 2003 provides a comprehensive legal framework for the insurance industry, establishing standards for business products, premium rates and policyholder protection. While the NICOM enforces this provision and promotes industry growth. I want to look at the National Insurance Commission (NICOM). Mandate is to ensure the effective administration, supervision and regulation control of the insurance business in Nigeria. The key functions are establishing standards for insurance business operation, approving premium rates and commissions, protecting policy beneficiaries and third parties, regulating transactions between local and international insurers, acting as an advisor to the federal government on insurance matters, and providing new insurance products before they are introduced into the market. Look at the Insurance Act 2003. Purpose is to provide a legal framework for the Nigerian insurance industry and protect policy holders. The key provisions are regulatory framework, consumers protection, market conduct and governance. The regulatory framework establishes the powers and function of insurance industry regulator, while the consumer protection introduces mechanism to safeguard placeholders from unfair practices and establish a consumer protection fund, though this has been significantly enhanced in later reforms. We have the market conduct, set standards for the conduct of insurance business and activities of insurance institutions, while the government outlined requirements for insurance, including the maintenance of registers for policies and records of meetings. So to look at the relationship between NICOM and the Insurance Act 2003. The NICOM derives its power from both the National Insurance Commission Act 1997 and the Insurance Act 2003. The Insurance Act 2003 and its subsequent amendments provide the foundational legal text that NICOM enforces and implements to achieve its mandate of regulating the Nigerian insurance sector. Kenya Insurance Regulatory Authority and Act. The talkative Islamic insurance regulation in Africa. Kenya has its regulation from a a Tawqaful Islamic insurance under the Insurance Act and the Insurance Regulatory Authority with specific Tawqaful operational guidelines detailing requirements for operator authorization, fund management and participant interest. These regulations are designed to ensure Sharia compliance, promote prudent fund management and protect policyholders through transparency and good governance. Look at the insurance laws in Ghana. Ghana insurance laws are governed by Insurance Act 2021 Act 1061, which replaced older legislation. Key aspects include the regulation of new insurance licenses, such as the micro-insurance agent and the introduction of compulsory insurance covers like group life, policy, public liability and professional indemnity. The National Insurance Commission (NIC) oversees the industry, including regulation of foreign insurers operating in Ghana. The key features in Ghana insurance laws include the Insurance Act 2021, the new license categories, compulsory insurance covers. Let's look at the Insurance Act 2021. This is the primary legislation governing the insurance sector in Ghana. It replaced the Insurance Act 2006 19 at 7 to 4. New license category. This act introduced new licenses including a micro insurance agent for those who deal specifically with micro insurance contract and a technical service provider for companies offering support service like the underwriting and claims administration. The compulsory insurance covers the new law mandate additional insurance covers including the group life for employees, the public liability and professional indemnity, the regulation of foreign insurances. These acts set out a foreign insurers who that operate can operate, which often involves authorization from National Insurance Commission and the meeting specific conditions such as demonstrating sufficient capacity in Ghana for the risks and under an industry oversight. The National Insurance NIC is the regulatory body responsible for supervising the insurance industry in accordance with the. I want to look at the insurance laws in China. Insurance laws in China are primarily based on the insurance laws of the People's Republic of China, which mandate that commercial insurance must be conducted by licensed insurance companies, and the contracts must include specific details like the insured information, the scope of coverage, and premiums. Key principles include good faith and voluntary participation, and the laws require strict supervision by the regulatory authority, the China Banking and Insurance Regulation Commission. This law also addresses issues like the policyholder's duty of truthful disclosure and the outlined penalties for violation. Core principles and regulation and legal basis, market entry, supervision, and good faith. The legal basis. The foundational law is the insurance law of the People's Republic of China, supported by judicial interpretation and regulation from the China Banking and Insurance Regulatory Commission, that is CBIRC. Market entry. Commercial insurance can only be operated by companies that have been established according to laws. No other entities or individuals are permitted to operate commercial insurance businesses. Also of supervision, the CBIRC is the national authority responsible for supervising and administrating the insurance industry. While the good faith, all parties involved in insurance activities must adhere to the principle of good faith. To look at the insurance laws in Russia. Insurance laws in Russia are primarily governed by the Civil Code of Russian Federation, the Federal Law on the Organization of Insurance Businesses, number 401521. Key aspects include the requirement that only licensed insurers can underwrite risks within Russia, the need for specific terms in all insurance contracts like the subject, peril, sum insured, and duration, and the regulations set by the Central Bank of Russia. Russia also has specific federal laws for compulsory insurance, such as the compulsory health insurance, and the country prohibits reinsurance from certain unfriendly states. Core legislations and regulations are Civil Code and Federal Law, Central Banks of Russia, the Central Bank of Russia, and compulsory insurance. The Civil Code and Federal Law. The foundation of Russian insurance law is the Civil Code, that is XL chapter 40 chapter 48 insurance, and the Federal Law 1415 X on the Organization of Insurance Businesses. Central Bank in Russia. The central bank is the primary regulator of the insurance market and has the power to issue regulation. Compulsory insurance. Specific federal laws dictate the terms of compulsory insurance, such as Federal Law on compulsory health insurance. Also, insurance laws in Japan. Japan insurance laws are primarily governed by the Insurance Act and the Insurance Business Act, with the Financial Service Agency acting as the main regulator. The FSA supervises insurance companies and approves new products, while the IBA regulates the insurance business operation, requiring license from insurance activity. Certain lines of insurance, such as automobile liability, workers' accident compensation, and nuclear risks, are compulsory. The key regulation and governing bodies are Insurance Act, Insurance Business Act, financial agencies, and the local finance bureaus. Thank you. for listening.